Hey, welcome back, everybody. Again, my name is Darson Grantham. On this channel, we try to go over things that make it easier and more thought-provoking to help you be a better investor in real estate. And on this episode, Jared and I talk about a few things, a couple controversial things, forecasting for 2023, forecasting and who you should follow when you're forecasting 2023, because nobody knows the answer. There's always kind of a percentage of right and wrong, and nobody knows until we look back and review the year at the end of the year, right? Also, one thing we talk about is the huge insurance premium changes that are happening in the market today, to a point where it can kill a deal, and we have both seen it kill a deal, where insurance premiums are going up, and how our clients are justifying it and or taking into account when they are underwriting properties. Okay, everyone, welcome back to the show. My name is Darson Grantham, and this is Jared Huseman. We do content on this channel simply to provide value to those that are investing in real estate, whether that's single family, small multifamily, large multifamily, whether it's in Des Moines, Iowa, around the country, or Iowa in general. We kind of have a good grasp on that between the two of our networks. And so we really just put this content out there to give back, to help folks that are trying to understand what boots on the ground looks like in the Des Moines, Iowa area national forecast.
And I can tell you, boots on the ground is much different now in the winter than it is in the summer, the month around with all the snow we're tracking through. But one thing I'll add on that as well, follow either Darson or myself, Catalyst team. You can follow our information there. We don't just talk also about real estate. We also talk a lot about boots on the ground, yes. We also try to give our experience, our advice on business, on some life stuff. This is real life knowledge. In fact, I just gave one of my TikToks the other day, kind of a spoiler for anyone that wants to follow this. Like the advice you'll never hear about is, I have like 5 different attorneys that I use for different sources. Like I have a real estate attorney, I have an attorney just for my business entity creation, another one for estates, and then another one that's just a pit bull that loves to litigate. Like he is an asshole, but he is a great litigation attorney. And so like, you'll hear people say, go out and get attorneys, but they don't tell you about how you should get different types of attorneys for different types of sources. They also don't tell you advice like you want the asshole attorney as litigation. Like that's
as litigation.
As litigation, exactly. But
on a real estate transaction, I don't want the asshole attorney.
So the point I'm making that is that advice, I mean, I tend to give on my channel as well. It's sometimes advice you're going to get, cold hard facts, real life. It's just actually being someone who's in the business, owning real estate, investing in real estate, being a broker, being an agent. And just also my experiences now after, for me, 13 years of doing this and being around it now for 20 years I've been around real estate. My dad's a developer. So 20 years around real estate, 13 years actively investing myself, 15 years learning about it. My channel I know is full of a lot of just advice, tidbit, tricks and stuff on not just real estate, but also business as well. Again, just put this content out there just to give you the real cold hard facts of what it's like in the trenches, boots in the ground, as you kind of said.
Yeah, so like when you're saying that, the word I think of is transparency.
Yeah.
Right, like when I became an agent, one of the things I hated was the non-transparency of the agent world. And the commercial agent's even worse, so we'll just talk kind of residential first.
Which is funny because my team's theme, as you know, this is trust through transparency. We're always going to be transparent on what we know about a deal.
Yep.
And what is transparent out there, because that's one thing I learned very clearly on as well, is how opaque is the word that is the opposite word I guess there. How opaque the real estate world is, which can be good, by the way.
It's actually a great thing.
This is exactly why you make money, is because it's opaque. If it's transparent, it becomes stocks and everybody knows the information. If it's opaque, you make more money. However, it also means you can lose your fucking ass, and you're going to edit that probably fucking part out. I know Darson's probably rolling his face, but that's just the truth. Like, you're going to lose your ass if you are too opaque sometimes.
Yeah, I don't think that's. Yeah, I would argue a little bit on, can you be too transparent as long as you're ethically respecting your clients' wishes and their guidelines? Like, I don't think that transparency, the thing is like, as loud as our voices could be, we still are not going to ruin a deal for someone else, right? Or like make the transactions feel more like stocks instead of like getting a good deal.
I will always be transparent for whoever my clients are. At the same point too, understand that as agents, we're fiduciary agents, same as an attorney or an accountant is. So our job is to protect our clients as true fiduciaries of their money, their financial interest, their investments. And we are not going to kill deals over that. In fact, that's as you bring up, you want to talk about what we're seeing in the markets and things.
Yeah, let's go.
I was talking about appraisals actually earlier on the same concept. So right now, big deal for us in Iowa, very heavy is insurance premiums right now. Insurance, check it out, read through it. We're seeing heavy increases. I used to underwrite apartment complexes, $300 annually per unit for apartment complex. That is not even close to what we're seeing now. We're seeing $500-$600 per unit in insurance premiums here. So we're seeing doubling, 200%, 300% in increases on insurance premiums. And what has happened, by the way, for backstory here, is because of all of our derechos, all of our just cold weather we've had.
All of our very bad weather.
Yes. People have put a lot of claims in on roofs, and the insurance companies have paid them all out, essentially, and now they're saying we no longer want to insure unless we get a much higher premium. And the reason I bring this up is because an appraiser and I were talking about a deal currently working on that I'm working on. I'm representing the seller. And he was saying, what are you running for your insurance? And I said, we are running this XYZ $600 per unit for our insurance. And he goes, man, that's really high. Are you sure? I said, yes. I could have actually lied and not been transparent and tried to get down to get a better appraisal. But I wanted to be honest with the appraiser, honest with the lender, honest with the buyer, and say, this is actually what we're doing. And he's like, no, I agree. He goes, I know other agents that will try to tell them they can still get $300 to $400 in premiums. And I said, well, they're lying. So this is a small example of what we're seeing in the trenches right now. And it's a huge difference because I'm telling you right now, on these deals, in fact, I have one other owner just called me, his insurance is almost as high as his taxes. You're talking about...
That's high in Des Moines.
I know, right? And he's trying to get other quotes. But when you're talking about these insurance premiums going up 200-300% on a cap rate basis, which for us in commercial, if you don't know where cap rates are, we'll talk about later on. But on a cap rate basis of 7% cap rate right now, give or take, that can literally equate to tens of thousands, sometimes even hundreds of thousands of dollars of difference in price from just the insurance premiums going up in 2023.
Yeah. I mean... I've seen it too, especially on conversions. So converted properties, like there's literally some, I mean, the majority of insurance carriers just won't even carry them.
Yep.
And that was bad before derecho and the bad weather storms 2-3 years ago. And now it's just exponentially worse. I mean, we almost had a deal killed because of it. The buyers didn't underwrite properly.
Yep.
And fortunately, it all worked out. They were, I don't know how they ended up doing it, but it worked out. We even went to the seller's insurance carrier and said, hey, can we just take over the policy? We just want to just roll with it. And the insurance carriers, nope, they're grandfathered in. If that changes ownership, we will not.
We had the same one. This current one we're working on, we went to the same insurance carrier and they still did 200% increase. Something really important to think about though, if you do not know how insurance works, getting back to real life, understand the difference between actual cash value and replacement cost. And understand what your bank and your lender will want and require. Sometimes, as a way to get around this, you can have actual cash value of the insurance premium and enough just to cover what you bought the property for or enough to cover your note on that property. Other times, you are going to have lenders require the replacement cost of that property. I can tell you right now, the replacement cost, especially the way construction prices have been right now, is going to be much higher. So, also learn to understand insurance premiums, and you may be able to find other ways around that if you know how it works. The other thing I'm recommending, again, real life scenario for anybody watching this, no matter when it is, whether it's now or in a few months from now, read your insurance premiums, because I have been hearing as well people putting clauses in, the insurance providers saying, we'll insure you, but we will not cover a roof for any kind of wind damage. And wind damage can mean the tornado, wind, derecho, whatever it may be. So the old days of waiting for a good hailstorm to roll through and get a new roof, which used to be common amongst owners and stuff, that is gone, by the way, guys. It's getting out of it. Even if you're a homeowner, I highly recommend you check on this. Over the holidays, I told my family this, aunts and uncles, they didn't believe me. I said, go read it. So,
well, sometimes, I mean, in your business, it's much more common than my business where you have a sale and it's multiple properties, right? And they insure the roof of only one property or only one building, right? So hailstorm comes through and the policy says we'll replace the roof of one of the 5 buildings, right? Which you should have a good insurance carrier that can protect you on this stuff. Like that is who I would have you rely on, just like you rely on us to help you understand the property as a real estate agents and brokers. But you're a good insurance agent should explain all this to you, but you still have to ask the right questions. If you've just rolled policies over and you're now dealing with the admin of the insurance company because you've just, been with them for so long, I'd highly recommend having a sit-down consult with the main agent to really explain to them, hey, this is what's going on. Do I have the right stuff?
Yeah. Am I accurately covered? Am I actual cash value? My replacement cost? How much replacement cost? Do I have umbrella policies, by the way, as well? Especially if you're a large owner of apartment complexes and you're facing liability. Talk about that. Insurance can be a huge thing to think about. And by the way, guys, this is the perfect time to do it. As we go into these cold months, these first parts of the year, this is the perfect time to sit down. You're already doing it anyway, with your accountant, with your attorney, with your insurance agent. Talk to them. Talk to your real estate agent as well. And if you can't get them all in the same room, get them on the same Zoom anymore. It's super easy. And try to figure out, just make sure you're adequately protected. I'm doing this myself, and now I need to do it myself. And
so I actually met with an owner of a converted property. I had coffee with him last week, and this Thursday, the snowstorm. So the only reason I drove to town, I was like, I got to meet this guy. It's a new lead, someone to meet with. But he's selling his property because he can't get insurance over $400,000, and he thinks it's worth $700,000. Whether it's worth $700,000, we'll work on that. But yeah, he's like, I can't get enough coverage to cover. And he has it paid off in cash, right? Mm-hmm. So he's like, this is a huge liability, huge hole in my portfolio or potential hole.
Yeah, and this is a very in the trenches happening as we speak right now. Everyone wants to talk about the big news, interest rates going up and the market tanking and recession, blah, 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 all that other crap. This is something that's very affecting people today and will continue to affect them going forward, because now this is the new normal. Hence, we can use that old COVID quote, the new normal. These insurance quotes are going to be the new normal, and they will affect investors 100%, much more than you will see just anything else.
Yeah, because, if you compare them to insurance or interest rates have the potential to go back down. Mm-hmm. Your insurance rates are not going back down.
Well,
there's no way.
Right. And that's the thing, though, is that let's look at this, too. Interest rates have doubled in the last 6 months, but so have your insurance premiums.
Yeah.
And so here's something we need to think about, guys. For anybody going into 2023, predictions, you're going to hate or love who you are and where you are. Rent growth. I predict we've seen a falling off of rent growth in the fall. Rents have kind of stabilized, not gone up. I predict rents will go up more in the spring in Iowa, in Des Moines, because
they do every year.
Exactly. And we have to understand that because our rates went up on interest rates, because our insurance premiums went up, we have to raise rents as landlords to continue to cover the cost. However, here's the bad news. Rents are not going to double in the next 6 months.
Yeah, but your insurance premium also isn't the price of the property.
Sure.
It's not a comparable.
Yes, but I'm just saying that here's the fact is that we are still seeing the cost right now rise faster than the rental income. Yes. Percentage-wise, expenses are rising faster than the rent increases. Now, will rent increases continue to go through 2023, 2024, and beyond? That's a whole other question. Feel free to get on that one. We'll argue that 100%. What it looks like. Someone will say yes, some say no. But for 2023, highly predict expenses will continue to rise faster than rents can. This is also why in commercial, and I'm not sure how you guys do it, honestly. In commercial, we're seeing a lot of people do the pass-through scenario. So RUBS, resident utility billback systems. And then they can pass on to the tenant, have the tenant be responsible for it rather than the owner. Is very, very common right now and becoming more and more common as owners try to get out of the extra fees or the extra cost of this because they can't keep raising rents. So we'll stop raising rents. We'll just pass the cost on to you, which is our way of raising rents faster.
Yeah. It's interesting that you're finding that being more common than it was previous. Like good business practice was to do that no matter, if you could and the market would justify it, like you just did it. So,
It depends, though. I will say, arguably, I have seen from my experience as an agent and an owner, the ability to pass through cost in a RUB system like an investment on a small apartment complex or apartment complex tends to work better in the A and B class market, specifically the A class, maybe B. The C class, it can be done and it's been tried. However, don't expect to be a one-to-one collection. If you're going to bill out $2,000 a month of collections on utilities, don't expect $2,000 a month getting kicked back, and there are going to be plenty of tenants who are going to challenge you to evict them over a $30 water charge,
yes,
or a $35 expense. And so I find in C class it tends to, again, a dirty secret that no one talks about stuff, but in C class I found it's better. These guys don't know how to budget. These tenants usually don't. It's better to give them one monthly fee and have everything included in that than it is to potentially bill out. You're getting more likely to have collections, in my experience. Yeah. That's just an operational thing. You can choose to do what you feel best for your investments. That's what I would say.
No, that makes sense. So there's not too much there I disagree with on 2023. I mean, expenses, I don't think that your repairs, your labor, your materials or expenses are going to go up like they did in 2022. I just don't see that. The supply chain issues are fixed if there ever was one. So I don't see that. Contractors, they are still busy.
I would argue they're not fixed, by the way. I could argue that
one. Yeah, I know. I don't think they're ever...
whatever going to be fixed.
Well, they're never broken. It was just stupid shit in the way. Yeah.
Coast exposed bare what was already broken and wrong. Yeah. And it's never going to be totally fixed. Because when it is fixed, we're going to have some other problem come up.
Yeah. I don't care. But you can go get materials. There isn't anything that I've heard of that's super long wait anymore. And then contractors wise, there's a significantly higher number of contractors are willing to work on properties for a decent price compared to what there was a year ago.
The one thing I can say, and I want to get your thoughts on this, Darson, but the one thing, I had this conversation again this morning with another owner client potentially as well. And I get it. Everybody's saying they're gearing up. I'm gearing up for this big recession that's going to come, or this market's prices dropping, people are in trouble, blah, 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 all the other things happening. With that being said, things are slowing down, and I could be wrong. I'll always start off with I don't know what's going to happen in the future. I just do my best to predict and see what's happening in the past. I don't think prices are going to fall off as much as everybody thinks. People are hoping for this 20, 30% drop in the market. I think we're going to see it in the stocks.
We've already seen it. You think it's going to be another 20?
I've had someone tell me they're seeing it project another 20% drop in stocks between now and June. Someone I highly respect and listen to. However, real estate's a lag. It takes time. By the time the stock market figures its shit out and it translates to real estate, we are going to see a price drop, sure. Are we going to see all these deals get snapped up at 65 cents on the dollar? No. Because what's going to happen, in my opinion, especially as some of this non-recourse debt comes available and banks or non-recourse financiers do sell some of this debt at 70 cents on the dollar, once it hits the market, it's going to get bid up to 80, 85 cents on the market. Because there's still a lot of money, a lot of capital trying to chase these deals.
Yes, there is.
So everybody says we're waiting for these great deals. Well, understand if that deal hits the market, which it will. These banks will put these properties on the market because they want to maximize their value. They're not going to just pocket list these things. They want to get their best price because they're trying to recoup their cost into it. They're going to get bid up to about 80, 85%, and we're going to see about a 10, 15% drop in the market, but it's not going to be as substantial as I think what everybody is thinking. My personal opinion only.
Yeah, I mean, free to argue. It's so hard to say, one property is going to drop 15%.
Right.
On average, most of my clients don't buy turnkey properties. Mm-hmm. Right? And so when you don't buy a turnkey property and your plan is to renovate, put some lipstick on it, paint it, carpet, get rents up, how do you tell if that's down 10%, 15%? Your business is much more turnkey. It's more of a exact
to an extent,
property.
To an extent.
It's not every time, but it's more. There is more of that to transact on, right?
Right.
And a small the small multifamily, even on the single family homes, you just have to look at so I pulled up while he was talking the median sale price, and so January of last year, median sale price was in Des Moines. Actually, not Des Moines, just across the metro. It was $225, and January or end of December this year, where we're at right now, is $235, $240, and so we're up, right? And that's not crazy amounts, $10,000 roughly,
which is 4% on that value, give or take, up 4%. And I saw a stat actually, I think you were sick that day when I presented it to the group, your investment minute group. Yeah. But I saw a stat that they're predicting home prices for Des Moines to go down. Brace yourselves, 1 percentage point in 2023. So 235 average sale price to 232 average sale price.
Right.
If $3,000 makes or breaks the difference in your deal or in your valuation or in your house, we've got bigger issues to talk about beyond.
I think
that.
It comes down to more like it's so individualized as an investor of like what risk aptitude do you have on the property? If the value of the property goes down but rents don't, are you devastated?
Right.
Your bank account, your net worth sheet, your paper sheet goes down. Does that devastate you? Most people that I'm working with, they're not. That's not the situation that they're in.
And here's why. And here's exactly. I'm a very simple guy, even though I might not seem like it. But here's my reason why I think we're not going to have a down market in 2023 as much as everybody thinks. I think 2024, 2025, it can be a little more interesting and conversational about what that looks like. But here's my simple analysis. In talking to other investors across our market, at least of Iowa, and maybe throughout the country, but at least our market in Iowa here, there are still enough people who aren't hurting. And at the end of the day, pain is what will cause the problem. I mean, you talked to, and I was in the market in 09, 08, and not too much prior, not 06, 07, but when you talk to people that were in those markets prior to then, they will tell you that in 06, 07, everybody had great times. There was parties getting thrown. It was just like a massive party, and no one at all thought about this market going down. And that's why it went down. We reached a little bit of rational exuberance in 2021, I would say, but the Federal Reserve, for better or worse, has done a really good job of putting pause on that big party and that big breaks this year and making us all come to realization. And this is my point earlier, enough people have seen this exuberance happen in 2020, 2021, and they've geared up and sold assets and been in cash, ready to scoop up the deals that do happen. These are very well-connected investors and owners, very well capitalized. A lot of money sitting on the sidelines looking to buy. So I just don't see it. We haven't reached that irrational exuberance in the market yet. Now, if someone is in Austin.
We haven't seen it yet. We are not seeing it.
Yes. Now, I will say this right now. If you're in Austin, Texas, or you are in Dallas, Texas, there's been some exuberance going on there that you're probably having some problems, and you are facing a price drop in some of those big markets. So if you're in the very, very hot markets, I think that there is going to be some serious pain over the next 2 years on that. But those are so, to your point earlier, I think so small, so concentric in terms of properties and locations. I don't think we're going to, as a nation, feel the effects of it like we did in 08.
Yeah, I listen to a lot. You listen to a lot. I understand the scare tactic, the scare of media to say, hey, everything's going to fall to, the lowest of all lows. Robert Kiyosaki.
Right.
I mean, like big names saying that. And I get it. I'm still waiting to see that ball drop.
See, the thing is,
if things cash flow when you're purchasing them with a substantial down payment, if they go down in price, I just don't know why that matters. And I'm not, if there's one thing I'm bullish on, it's rents at least staying stable or going up in 2023. So to me, I'm like, just go buy something that cash flows. I don't care.
So here's the thing on that point as well. I'll come back to this, and I'm always going to say this. I've said this for years. You see me in my videos and YouTube and TikToks. If someone tells you they know what's going to happen, they're doing one of two things. They're either fucking lying to you or they're trying to sell you something. Okay.
I heard the other day. It was sorry. Go ahead.
No, well, it's feel free to comment in a second here. But when, no offense, but when I like these guys, I follow these guys. I listen to a lot of their advice at times. But when Grant Cardone, when Robert Kiyosaki, when Donald Trump, I don't care who the hell it is, says we're facing a massive recession, blah 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 blah. They always end on that is we're having a huge crisis coming, and that's why you need to invest in my fund because we're gonna go out and buy all this real estate on the cheap. So guess what they're doing? Boom, they're trying to sell you something. They're gonna scare you and then sell you something. That's how it works. So they're always trying to sell themselves. And these guys say, well, we're facing the biggest drop in history. Guess what? They're trying to sell you on investing with them and give them money to go out and buy these deals.
Yep.
It's not about you. It's about them.
Yep.
So, again, I always learn to take it with a grain of salt, guys, is always ask the question, maybe it's the natural rebel in me, is always ask the question of, why is this person saying what they're saying? Are they really doing it to help me like we're doing right now? We're just sharing our thoughts. Or is it really going to be like, this person is just writing a book because they're trying to pitch their class or their system of teaching on me, or they're doing this podcast, or they're doing this.
Do you know anyone? Who would you recommend people listen to then? While you think about that, so there's a guy on Bigger Pockets. His name's Dave something, but he does a podcast or a YouTube video called On the Market. And so when you're going through that, when you're talking, I was like, there's a guy I just listened to, and this is the guy. I can't remember his last name, but he runs this podcast, and he says like, you want to try to forecast the future in percentages, right? Like, at what percentage does this happen versus that happen? Because like you said, no one knows 100% that we're going to have a crash.
Yeah.
But there's a percentage chance that I think, or that someone thinks that we're going to have a chance. So you as an investor can say, okay, I think there's a 50% chance that we have a crash, right?
Sure.
A 20% chance, a 5% chance. I have not laid all that out to like figure out like where my variables are, what percentage chance I see. I just try to continue like day by day, look at all the data, listen to a wide variety of shit's hitting the fan, it's going to fall over.
Yep.
And the people that are saying, hey, the data doesn't show it yet. Like, we don't know that that's going to happen. Continue to watch.
To your point, and FYI, we've been doing this now with the Catalyst team now for the last 6 months. But it's called the feasibility or sensitivity analysis. And at the end of the day, what you're doing is you're going to say, here's a good, better, or worst case scenario. And we think the odds of good happening are 50%. We think the odds of bad happening are 10%. We think the odds of best case is 40%. And then you can and I won't go into the math here, I'll need a whiteboard for it. If you want, we'll do a video on it. You can then whiteboard out and create an average if we think this is going to be our actual cap rate or our return on investment cash on cash. We do it at the Catalyst team and all of our analysis anymore going forward. I can tell you right now, banks and appraisers and buyers love it because we can then say, here's why we believe what we believe. And there's a more case to it. But at the end of the day, what you're doing is you're taking a weight analysis saying, look, storm clouds are coming. Okay, well, what's that mean? Well, it means there's a silver lining. It means there's also a storm cloud. It means it also could just pass by really quick. It could go really long. It also means we're going to get rain. Maybe we need rain. So it's looking at all the options and the variables as well. It's actually a very simple but complex thing to do.
Yep. And if you wanted, like, you're super driven on that, like, those models, I tend to just do it in my head of, like, yeah, I just don't think that there's that good of a chance. Like, that's how scientific I get. I love that. I would love to see those documents.
Feel free.
For me, putting those together, there's no way in hell.
Come back to us afterwards. And anybody wants to check in afterwards, maybe we'll do a selfie or something. You can come watch it. It'll be fun to do. Anyway, to your point earlier, about who to follow. One, I do think Bigger Pockets is a good one. However, I actually will caution you as well. Bigger Pockets has also gotten a little bit, I think, almost too big, pun intended.
I don't know, too big, just not focused.
There's too many people telling you to one's wholesale, one's flip, one's burr, one's this, one that. But there's too many guys on that have also got on there and they realize they can raise a lot of money doing those things, those deals, in my opinion.
Yeah, they grew and then raised money, right? It wasn't they got on there to raise money, in my opinion.
I guess the way I would say this, and my advice real quick here, is the advice I would be willing to take, whether it's on Bigger Pockets or YouTube or TikTok or Instagram for all I care about, the guys I want to follow are the ones that have already made their money and they literally just get on there and they just talk about what they're doing and what they're seeing, and they literally never at one time ask you to buy anything. I know we talked before as well, but one guy I do love, I personally like him, is Alex Ramazzi. Like, at no point, and he says he owns Extras.com, he always says that, but at no point is he like, hey, I have some course, or I have this, or I have that. I've seen the other guys, Grant Cardone's one of the big ones. This Ryan guy's come up in Vegas as well. He's always, take this course, I have some course. And you're like, okay, you're trying to sell me something here, obviously, and I get it. There's a guy, though, I was able to meet a month or two ago, massive syndication, multifamily guy, really good guy. I liked him a lot. He's been in this for 20 plus years. And he actually wrote a book called, I think it's Brian Burke was his name. He wrote a book called The Hands-Off Investor. And what it was a book of how to interview syndicators to be an LP. The book's all actually for LPs, limited partnerships, that we talked about before as well. Yeah. And it's all actually based on how you interview a general partner before you give them money. And the reason he said he wrote it was because he saw two people doing bad business practices on GP. He is a GP, and he wanted to just share his knowledge of how he would interview a GP, and he is a GP. I would buy that book and read the book. I actually have that book, by the way. If you want it, I'll get you a copy. But he just came off as like, I'm already a wealthy guy. I'm making no money off from this. This does not help me in any scenario. I'm not trying to sell you. At no point does he say, invest in me, give me my fund. He's just like, here's this. Those are the guys, in my opinion, I would want to follow and hang around.
Yeah.
And by course, naturally, he's going to attract money because he's so honest and transparent, back to earlier conversations. But those are the guys I follow. The guys that have the big followings, the million plus, 10 million plus, generally speaking, they're looking for something.
Yeah.
There's a value they're trying to get.
Yeah, and like I'm a little hesitant on that because like they're also very smart, even if they're trying to sell you a course, right?
Mm-hmm.
Like you just have to, as a consumer, know what their motive is, what things on there should be questioned, right? So like anytime I'm listening to someone that says, this is going to happen based on this percentages, I want to look at that survey, right? I want to look at what size of data did they, evaluate, did they look at, survey, whatever. So just be a consumer, be a smart, educated investor.
I think it comes down to two. This goes back to and this goes back to even us a little bit. Look at how much content they produced and watch more than one freaking video before you decide to do anything with anybody. Try to understand who the person is and what their motivations are before you, start taking whatever they say as gospel.
Yep. I like just pulling pieces of data, right? So, these guys do the on the market and they'll do, home equity is this percentage, right?
Right.
That number varies depending on who you listen to and what survey we talk about, right? And so, like, which one is right? Which one do you feel most comfortable with? Is it an average? Now, if they're all close, then yeah, that's probably pretty close. If one's drastically different, like the rent's going down in Des Moines, like that was obnoxious. We did a video on it. Like,
yeah.
Rents did not decrease by 12% in Des Moines. Like,
yeah.
I don't care who you are. There's no
Clickbait.
one that, yeah.
Clickbait, 100%.
So just,
With that being said, so we've talked a lot about commercial to an extent and what we're seeing. I've been hearing, you tell me this goes back to the 20-year predictions, a lot of residential agents are starting to get part-time jobs all of a sudden or get full-time jobs and quit being agents. I'm hearing stuff's way slowing down. What do you see in residential?
This sounds terrible, but I don't talk to agents that aren't successful. I like dead serious. I don't have conversations unless they have a listed property that I want to see. Like I don't go hang out and grab coffee with agents that are not have a true business.
Sure.
And it's just, but I mean, I don't have any assistants anymore. So I said, hey, like I don't have the transactions coming in the next 3 or 4 months. That was November. And I said, hey, like you guys can stick around, but there might be a chance I can't pay you if I don't have transactions coming in. And so both of them found jobs in real estate. It's been very amicable, great. I still talk to them both. But like I saw that in my business. I was like, my transactions ended up this year at 48. Last year was at 55. Right? So down enough that I'm like, I just don't feel super good about keeping them on, right?
That's an interesting thing, by the way.
I called it early because I was like, I don't want to just like show up on a Friday and say, hey, I can't pay you.
It's funny. That's interesting because actually, this is also about anyone watching here, interesting for the commercial market. As residential slows down, we're seeing more and more commercial picking back up because as prices have fallen off that 5-10%, because they have fallen off, investors are saying, I got a deal. Because no investor likes to buy at the top hoping it goes higher. They like to buy, make the money on the buy. You make money on the buy. It's common.
Yep.
So prices actually are starting to actually speed more in commercial right now because we're saying, hey, look, these prices are down off from where they were a year ago. It's time to jump in, which is ironic because in 2020, most agents had their best year ever, and 2021. 2021 was good for us. 2020 was pretty good, but 2020 was a huge slowdown for 6 months for us. So it's funny that we kind of saw our recession almost back in 2020 in commercial, and now we're kind of speeding up, going well, where residential's kind of totally flipped the switch.
Yeah, and like it's one of those where it's number of transactions. That's what affects agents. It's not the price of the properties.
Right.
That's how it works. Just like we did, I always look at as an agent that works with investors, like you need to understand creative financing, right? So I had at our Tuesday meetup, we had creative financing. In future months, we're going to have appraisers, right? Appraisers on. We're going to have the city of Des Moines on. We're probably going to have an attorney that kind of talks about LLC type stuff, how you format it, how you have partnerships. So those are things like
one right way to do it.
Yeah, like
for the attorney part.
What?
For the attorney, one right way to do it, as we'll argue.
Okay. we can have different conversation about that. But yeah, I mean, as agents, they all should be able to morph. Like I've had that conversation with a few agents, like, hey, don't have any transactions, got to get part-time. Go knock doors in a neighborhood for 8 hours for 5 days. You'll land a deal. I will almost guarantee it.
Well, it's funny because even for me right now, I'm starting to see acceleration of deals as well because I have listings and also I have marketing. I'm at my 33 touch. It's great. You get my core report and beyond on my core report. Yeah. I do a lot of marketing. And I had someone yesterday, I talked about this earlier, off-market deal. Someone called me and goes, hey, actually, I kind of want to sell. You got a property listed nearby. And I saw that. And, I'm not really motivated to sell, but I would sell for the right price. Here's what it is. And so, like, a good agent, to your point, that's investing in their business will continue to be busy as well and continue to see things. This is also something I was thinking about as well, as we're just talking a little bit shit in the shit, but also a little bit serious note. Whenever you are interviewing someone, and I had this conversation with, back to the attorney conversation, when I'm interviewing attorneys and agents and accountants, how long they've been in the business does matter. And the reason I say that is if you're an accountant or you're CPA and you're new to the business, I probably don't want you. But I also don't want the old CPA who's so accustomed in the old conservative method that they're not willing to push that a little bit, right? Yep. So for me, for CPA, the age does matter a little bit. With that being said, when I'm doing my estate planning for my attorney, I want an old attorney. I want the oldest guy at that law firm who has seen every freaking estate in the world and will do my estate best for me because I see experience there. The reason I bring this up, as we talk about agents getting in and out of the market, I just happened to see an agent in the office here a little bit ago who was an agent for years. Very good agent, very well known, and at some point just said, you know what, I'm out of the business. And they were in the business for years. Very well known and a great agent, a great person. But at some point they said, you know what, this isn't for me. So also learn to judge when you are picking an agent, like one of us hopefully, to be your fiduciary agent in your real estate. Be willing to judge, do you want brand new? And what's that look like? Do you want experienced? And what's that look like? And what is your experience level? Have you been in this market for 20 plus years or 30 plus years? Which could be good or bad, depending on how you look at it. You could be old school method, or you could be cutting edge, depending on how you have it, a lot of experience. So that's something that I was thinking about for advice coming in. I say this a lot because as you come into this recession, which we are in a recession, or going into one, whatever the hell you want to call it, you do want to evaluate not just your investments, but also your team.
Yeah.
And who is your team in this right now? Because at the end of the day, when shit hits the fan, you're going to circle the wagons. And we circle the wagons means you need you to pull your team in close. There's a reason in football you huddle up. You huddle up, you get close. You make a plan, you go attack. Okay, that's called the offense. Even defense does that. So huddle up, get your team together, and figure out if these teams are the right people for you. I know I'm getting a new accountant right now because my accountant's not the one I want going into this recession. Full disclosure, guys. So if you're a good accountant, reach out to me. But, that's just my thoughts.
Yeah. It's hard to argue it. It's funny because everyone's like, recession happens, you need to, buckle down, you need to, grind harder. Mm-hmm. I grinded hard, you grinded hard. Like, I don't know. I don't know if I could work any harder than I worked the last 2 years. I hate that. But I could also work in different ways, right? Mm-hmm. If I have less transactions, I need to create more leads that come in.
Right.
So that is the work I need to do, right? And so creating content like this, mailing non-owner occupieds, texting non-owner occupieds, like of the small multifamily world, we'll end up doing 10% of our deals off market.
Yep.
Like by the end of the year, that's roughly where we're at.
60% of my deals are off market.
And so like that's
more than that even.
That's fun for me, right? Some agents literally couldn't figure out where to find that list.
Well, so this ties back into something you said earlier here. You said this actually a couple times now already. And this advice, I give this advice to actually someone your meetup group a few months back as well. If anybody out there is searching to talk to apartment owners to try to get them to sell your property. Okay, first off, you're competing with me, who talks to them at least every 3 or 4 months, who mails them all the time, who is constantly, I got a buyer for them. So you're competing against me. So first off, you need to beat me and work harder than me, which, by the way, you said earlier, is kind of a feat. So my answer to that, I actually hate that word. I actually hate that term, work harder or work hard. I absolutely loathe that term. I say work smarter. To your point right now, and I'm seeing it too.
Both.
I'm seeing deals that are done that are creative.
Yeah.
That are get back to be creative because they're being smarter. The smarter you can work right now, the more likely you're going to win. Now, yes, hard work does play a certain role in it, but when I say this too, I mean this in a certain manner. You can work hard and be very efficient with 40 hours a week of work. A 40-hour work week, being very efficient and working smart in those 40 hours, I can get more done in 40 hours working smart than you can working 80 hours hard. That doesn't mean I am being like really hardworking. I'm being very efficient. So that's one thing we talked about, a friend of mine talked about as well, with that Ed Mollett always talks about it, how he works from 6 a.m. to noon to 6 p.m. And he gets more done in those 6 hours than most people do in a 12-hour day because he's very efficient with it. So I come back to always work smarter. I always say don't run into a wall. Don't try to break down a wall. It hurts. Try something when you're a kid or just want to be a dumbass, run into a wall. It hurts. Go around it. Go over it. Build a door, which ties into your point earlier. In today's market, being creative, being smarter is the way to go. It's not work harder, it's work smarter. And again, if you're an investor trying to find deals right now, you need to be more creative than ever in how you're finding those deals. That's what I would recommend.
Yeah. I mean, I just struggle just always be creative. Right? Like, you know what I mean?
Oh, yeah, you should always be asking that.
One of the things so I did a brand, not revamp, but trying to figure out, who are my ideal clients, right? Mm-hmm. And so one of the things that kept coming up is, people that want to make smart real estate decisions and want to find a way to use the property that we're looking at in the highest and best use. Mm-hmm. My brain works that way. I'm like, you need to turn this into a bedroom. You need to knock down this wall. You need to do this to this property. That's the way. It's the highest and best use of the property, right? Yep. Some people can't see that, and I don't know if it's the longer you've looked at properties. It's really an untangible. But as I talked with the brand person, they're like, you have really unique not perspective on things. And I'm like, yeah, it's called non-emotional, and I want to maximize the opportunity. That's how I am. But every agent, in these down times, should be doing that. Well, or learning how to do that.
Again, it's going back to creating skills. But to your point earlier, and I'll say this too, I get so sick of the typical, I want to buy a property, fix it up, and raise the rents. That is the simplest way of looking at things, and it's been done. It's old school. It's not anything new about it at all. And to your point earlier, I was talking to another client who just bought a retail building. And again, I won't go into all the details of it too, but it was finding the highest and best use. It was being creative. It was being able to see a deal for what it can be or what it could be. That's where you make more money and more value than just saying, well, I'm going to go on this and fix stuff up. So I would highly encourage anybody out there who is in that field of just find it, fix it up, raise the rent. Try to find other ways to do it. And if you want to figure out other ways to do it, come to one of our meetup groups or keep following us. Yeah. Or talk to us.
Yeah, I was going to say, so that we'll wrap this up and we'll do kind of where people can find you, how people can reach out. And so myself, below in this video, I have a Calendly link, right? So you can go schedule 30 minutes on my calendar and we'll have an open-ended strategy session. And you'll tell me what questions you have, how I can help you in the Des Moines real estate. There's no hey, I need to sign an exclusive. There's no nothing. You just sit down and we'll just have a conversation. Until my calendar is loaded with 30-minute segments, I'm going to open-endedly just offer that. Whether you have an agent that you're working with or not, you want to question the tactics that agents use, I will give you my opinion as long as it is in an ethical, ethical situation.
Yeah, not bad mouthing.
So do that. Also subscribe and join this YouTube channel or podcast, because quite frankly, I'm trying to put more and more content out here, trying to more redefine exactly the type of content we're putting out. And it's going to turn into a lot of interviews, interviews with investors, interviews with vendors, like I said, appraisers, contractors, the city of Des Moines, if at all possible, lenders, just things and people that can create education and information for folks that are looking to invest in Des Moines area. So that's how you reach me.
I mean, and for me, it's just reach out to us, the Catalyst team, or Jared Huseman. I would say I'm open for 15 minutes at a time, either call or Zoom. I'm not gonna say 30 minutes. 15 minutes is about the most I can book up until I'm totally booked to my whole day. But I'm always free to give 15 minutes. It's when I said on TikTok the other day, I will always give anybody the time of day. I don't care whether you're brand new or whether you are, Donald Trump. Now if you're Donald Trump, I might give you a little more time. But at the end of the day, everybody deserves 15 minutes. I'll always talk to you and ask questions or ask what you're looking for. At least get you added to our list, that kind of thing. So feel free to reach out to us, the Catalyst team. That's KATALYST. We have our YouTube channel, TikTok as well. Just follow me, Jared Huseman. Pretty easy to find. And just keep pretty simple with that as well.
Cool. And we'll follow this up with, we're going to change up our format so that we're not going to do these videos weekly. We're going to do them monthly, just so that we have it's probably going to be a longer segment, kind of like this one's about 50 minutes. So that is what we're going to do. We're going to do them monthly, and we'll kind of have a topic we'll talk about, and we'll really talk about what we're seeing with buyers, sellers in the market in general, economics, and should give us a good perspective of like big changes from the previous one. So we can have conversations.
Definitely, because by the time we talk next month, it's going to be a new year. So lots going to change.
Yep. Okay, until next time, we'll see you.
All right,
Thank you.
Guys.